How to invest in stocks. When you invest in a stock, you're hoping the company grows and performs well over time. That's how you end up making money. One of the best ways for beginners to learn how to invest in stocks is to put money in an online investment account and purchase stocks from there. You don't have to have a lot of money to start investing. Let's discuss how to invest in stocks in 6 steps. Decide how you want to invest in the stock market. There are several ways to approach stock investing. Choose the option below that best shows how hands-on you'd like to be.
I'd like to choose stocks and stock funds on my own.
I'd like an expert to manage the process for me.
I'd like to start investing in my employer investment plans. This can be a great option because many employer plans offer a match. Employer matches are basically free money. If your employer offers a 4% match and you make $100,000 a year, if you contribute $4,000 to your 401(k), so will your employer. That means you get $4,000 for free. Choose an investment account. Once you know how you want to invest, you're ready to shop for an investment account, also known as a brokerage account.
There are several types of investment accounts, and it's a good idea to figure out which account is right for you. Keep in mind, an investment account is just an account. It's not an investment. You have to add money to it, and then purchase investments from there in order to have your money grow in value. An online investment account likely offers your quickest and least expensive path to buying stocks, funds, and a variety of other investments.
Learn the difference between investing in stocks and funds. Stock investing doesn't have to be complicated. For most people, stock market investing means choosing among these 2 investment types.
Stock mutual funds or exchange-traded funds. Mutual funds let you purchase small pieces of many different stocks in a single transaction. Index funds and ETFs are a kind of mutual fund that track an index. For example, a S&P 500 fund replicates that index by buying the stock of the companies in it. When you invest in a fund, you also own small pieces of each of those companies. You can put several funds together to build a diversified portfolio. Note that stock mutual funds are also sometimes called equity mutual funds.
Individual stocks. If you're after a specific company, you can buy a single share or a few shares as a way to dip your toe into the stock trading waters. Building a diversified portfolio out of many individual stocks is possible, but it takes a significant investment and research. Set a budget for your stock market investment. The amount of money you need to buy an individual stock depends on how expensive the shares are. Share prices can range from just a few dollars to a few $1,000s. If you want mutual funds and have a small budget, an exchange-traded fund, ETF, may be your best bet. Mutual funds often have minimums of $1,000 or more, but ETFs trade like a stock, which means you purchase them for a share price, in some cases less than $100. Focus on investing for the long term. Stock market investments have proven to be one of the best ways to grow long-term wealth. Over several decades, the average stock market return is about 10% per year.
However, remember that's just an average across the entire market. Some years will be up, some down, and individual stocks will vary in their returns. For long-term investors, the stock market is a good investment no matter what's happening day to day or year to year. It's that long-term average they're looking for. The best thing to do after you start investing in stocks or mutual funds may be the hardest. Don't look at them.
Unless you're trying to beat the odds and succeed at day trading, it's good to avoid the habit of compulsively checking how your stocks are doing several times a day, every day. Manage your stock portfolio. While fretting over daily fluctuations won't do much for your portfolio's health, or your own, there will of course be times when you'll need to check in on your stocks or other investments. If you follow the steps above to buy mutual funds and individual stocks over time, you'll want to revisit your portfolio a few times a year to make sure it's still in line with your investment goals. A few things to consider. If you're approaching retirement, you may want to move some of your stock investments over to more conservative fixed income investments. If your portfolio is too heavily weighted in one sector or industry, consider buying stocks or funds in a different sector to build more diversification. Finally, the process of picking stocks can be overwhelming, especially for beginners. After all, there are thousands of stocks listed on the major US exchanges. Stock investing is filled with intricate strategies and approaches, yet some of the most successful investors have done little more than stick with stock market basics.
That generally means using funds for the bulk of your portfolio. Warren Buffett has famously said a low-cost S&P 500 ETF is the best investment. The S&P 500 is an index consisting of about 500 of the largest publicly traded companies in the US over the last 50 years. Its average annual return has been more or less the same as that of the market as a whole, about 10%.